Hey guys, Mike here. So, oh boy, what a day in the market, right? I mean, obviously we got the turmoil from yesterday with the oil being the production that is being cut. Oil spikes up like $10 a barrel overnight. The market opens up. You're like, oh boy, it's red, especially the Qs, you know. And then we get some savior. We get some terrible manufacturing data, right? I'm telling you, good, bad news for the economy, good news for the market. It still seems to be the way we're in. And what came out was the PMI manufacturing data I told you about yesterday that was coming out. And obviously it wasn't good. You see that chart right there? If that was a stock, you would not want to buy it. And if I zoom in on this right here for you, you can see this goes over manufacturing at a glance. And you can see it came in lower than expected. And more importantly, all you really got to do is look at these. Contracting, contracting, contracting.
Expired, expired, expired.
Come on, new orders, production, employment, supplier deliveries. Hey, that's actually faster. Inventory is contracting. That's actually kind of a good thing. Customer inventories too low. Prices decreasing. That's actually good. Backlog of orders contracting. New export orders contracting. Imports contracting. Overall economy contracting. Manufacturing sector contracting. Whoo, boy. And then you go to the rate of change. And a lot of these, it's happening faster than what you would want it to, right? And so that's not a good thing. Some of them are slower, though, right? Okay, you have to look through this yourself. I'll let you look through it. But it wasn't good. And of course, when it came out, the market said, hey, this is awesome. And so what happens? I'm pretty sure you can spot the moment that this report came out because yields took a dump, right? They're actually green. Boom, take a hit. There's a 2-year. Do I have to tell you what happened or when it happened on 10-year? There it is right there. It took a dump. So, of course, wow, stocks love it. The market, this is fantastic. Why? Because the Fed's going to have to cut now, baby. It was actually going up. They were going, wait, man, we're pricing too much. And they go, nope, economy's falling apart. They're going to have to cut. We're good, right? And that's what this is, okay? And we'll go into a little bit more about why the market, because I saw it a lot of people like, I just don't understand what's going on. If oil's going up and this, and the market just keeps pumping, right? And so, I'll tell you one thing it did pump just real quick. And I hadn't seen this one in a long time, but Elon's back at it. Look at Dogecoin. Woo! Big 30% pop. Look at that pop right there. Oh my goodness. And of course, like, oh, is it back? What happened? It got 10 cents, I think it was. Well, there's old Elon up to his tricks. Says like Doge jumps after Elon Musk replaces Twitter Bird with Shiba Inu. I don't know. Let me know if that was actually the case because I go on Twitter, I don't see it. But again, it's Dogecoin. I mean, do what you want to do with it, but it definitely popped. Now, the other one I'll talk to you about before I get into these charts and stuff is this came out yesterday. And it's talking about TikTok's revenue. And I asked the members, I said, can you imagine if they're forced to sell to an American company, what an American company would pay for this? And I would be all over it if I was an American company because it's unbelievable. Their revenue they generated this year alone is more than Snap, Pinterest, and Twitter combined. And this breaks down to US and worldwide. And you can see it's almost 10 billion, and that's excluding US, right? And so, I mean, they own the younger generation. The younger generation loves this. I mean, you would have access to a whole younger generation has basically left the rest of these platforms, right? I mean, they love shaking the butt on TikTok and whatever else they do. I'm not on it. Let me know in the comments if you're on it and if it's even worth it. Man, I need to check it out. And if you get anything out of this, guys, please hit that like and subscribe button. I really appreciate it. And if you're new, think about subscribing. If you like this content, I really appreciate your support. And also put in the comments what company you think would actually buy it. I mean, there's no doubt Google would be involved. I know Meta would go hand over fist trying to get a hold of this one for sure. I think even Apple would jump in on this. They say, hey, we got enough money. Why not? Let's do it. Because if you can take over that platform, and somebody was even telling one of the members saying some other stuff they do on TikTok, and I'm like, man, but the younger generation just loves it. The stats are crazy on the membership of that thing. But anyway, getting back to the real world for a second, understand this is about rate cuts, everything else, but also understand this is about the Fed, right? This move, and the reason why it just won't go no matter what news comes out. It doesn't matter, right? Because liquidity drives markets, and they can say what they want to. But when you put $375 billion in there with a quickness like they did, that is going to affect markets. And I know you're thinking, Mike, this wasn't QE, right? They didn't print money and all this stuff. But look, here's what I'll say to this. Understand, and you explain the difference to me in the comments because I've thought about this all day. If you got a pencil, and I see that pencil, and I say, hey, Jim, I'll give you $100 for that pencil. And you give me the pencil, and I give you $100. That $100 went to you, means it went in the system, right? Now, you come to me, and let's say Exhibit 2 here, and you say, man, I'm in a real bad way here, made a lot of bad investments, got this, I really need to, borrow some money. And I say, well, okay, well, I see that pencil there you got. And I say, give me the pencil for collateral, and I'll give you the $100. Now, did Jim just get $100 either way it went, right? So that $100 went in the system either way, right? Now, what makes it even worse, just as a side note, what the Fed did was, in their case, what they would have told Jim was, hey, Jim, what you got for collateral? And Jim would say, oh, I got this pencil right here. Yeah, that's what I got right here. It's I can give you this. And they go, yeah, we'll take it, and I'll still give you the $100, right? Because what do? They were so desperate to give these banks money that they said, we'll give you par value, which is also the same as face value, for these bonds, right? And that's the amount of money they pay for the bond, not what they're worth. So basically what they did was, if this is a bond certificate, which you don't really get anymore or anything, but if this was a certificate, picture a big turd, big giant like horse turd piled on top of it. That's what they took in to give them the money, because they would just took the bond at the value it was at. They wouldn't have been able to borrow as much money, right? So they go, don't worry, we'll take this giant horse turd on top of the bond certificate and because of the huge, gigantic turd, how much it weighs, that's what we'll make up in the money part of it. We'll give you the money, right? And it's a loan. It's a loan. When they give the money back, let's see if they actually give the money back, right? Or is this going to be a PPP thing or whatever that one was called, where they forgave them all across the board pretty much, right? So we'll see on that right there. But that's what they're holding right now at the Fed, is bond certificates with turds all over them, just piled up on them, right? Because they're worth junk right now, right? And imagine, and here's what I say, what frustrates me about this kind of stuff is, dang well you ain't going to no bank anywhere in this country. I'm not you, me, whoever, a regular, hard-working, everyday American ain't going to say, hey, man, I'm in a tough way, made some bad investments, need a loan, got this car out there I bought 5 years ago for 20 grand, right? Now, Kelley Blue Book says it's only worth $1,000, but I really need like a $20,000 loan. So could you give me par value or face value for that? Same thing. For that car, is the bank going to do that for you? No. But guess what? The Fed will. Yeah, the central bank, they go, yeah, we got this not for you, for these for all the other banks, right? They made all the bad business decisions. All this other stuff. No problem. We got that for you, but not for you or me. That's never going to happen, right? That's the frustrating part. That's what frustrates a lot of people about that. It's how the system is set up like that. But they can keep calling it, oh, it's not QE. We didn't print new money. No, you didn't. But guess what? It's in the system. Now, is the bank going to loan it out? What are they going to do with it? Couldn't tell you, right? But that's what the market sees too. And again, their balance sheet increased. That's what the market saw. They go, oh yeah, still increased. Now they're still doing QT supposedly. We'll see that. But you saw how quickly they unraveled half of QT, just like that, right? That's how quick it is. That's what the market's betting on. They're going to flip on rates, start cutting rates, and quit rolling off that balance sheet. And you see how quick they undid all half of what they did, and took them a year to just do that little bit. And I was making fun of it all the way down, and then I did half of it, just like that. That's how quick it turns, and that's what the market, again, it's an addict looking for the fix, right? Looking for the fix. That's the fix, okay? And so, keep that in mind when you're wondering. Now, looking at the S&P, it's very simple. Keep it on this time frame. It's a very short time frame. You can see moved up. And what do we talk about the level to watch? 411, between 411.50, 411.60. If the bulls take that and able to make that into support, they take control, right? What did it get to? 411.37, I believe, was the half of the day. Almost got there. And if we take a bigger, longer snapshot, you can just see we've been wedged in here, right? This is, and we're right here. Like, are we going to break out? Are we going to break above and start going for that extended weekly move? Or are we going to end up getting basically rejected again and continue to move and continue to get wedged in right here? That's really what people are waiting to see. And again, you got all kinds of stuff happening with oil and all this other crazy mess, but that's what we're talking about. A lot of stocks are still getting overextended. We'll see. Qs, very easy. I talked about this yesterday, but here's the thing. Higher and low, higher and low, higher and low, higher and low. Boom, broke through that major resistance level right there. Had a slight pullback today. Well, it was down one and some percent, but they started pumping up at the end of the day, and so it barely ended up down at all, right? You got your RSI on the daily, starting to get an overball, a MACD that's screaming it wants to roll over for a short term, at least, healthy pullback. And here's Apple, right? The market itself. Sitting right up against that trend line, and then it gets up there, and then what happens? At the very end of the day, the last 3 minutes, look at this thing getting rejected, and then the huge push up right there by the algos, and then it comes right down and sits right on top of it for the soap opera. It's always a soap opera, right? We got to leave a cliffhanger. Now, what can help push this up? Well, what can help push it up is this right here. They end up getting a upgrade. Wow, and not only an upgrade, the price target now is 205, right? And they're saying iPhone sales in Asia are just going to kill it and all that good stuff. So that can definitely help you. And it's amazing how these kind of news come out like right when it needs that push to come out and get above these major resistance lines and stuff. Well, this will do it, right? Now, Tesla, here's some good news and bad news. Obviously, Tesla killed their deliveries. But all of a sudden, here comes some news out about margins. They're worried about margins. So they cut costs, all this stuff. So we're going to gap it down big time in the morning. Here's the good news, though. See that gap over to the left? Well, we filled that gap, right? We talked about this last week. See this other gap over here to the left? Right, filled that one. So guess what? We were worried about the gaps up. Both of them filled. Check, check, and check, okay? And now you got this big gap above that needs to be filled. What saved it, of course? Oh, shockingly, there's that trend line, right? Major support right there for it. Bounced right off of it, right? And so, not sure where the whole margin worry came from, but it's amazing how that works when you get into a major like 210 to 220 level, right? Meta, very simple. Keeps moving up. It's 17.01% away from that big gap. And it's that simple for Meta. Again, if you didn't see yesterday's video, I'll put it at the end. You can go watch that because I put a lot more detail into the charts on that one. But it's really just that simple right now, right? You can feel it in the market, right? It wants to move up and be like, oh, and like all the bears want to push it down. They're trying to hold and everything. But there's key levels coming up here. You can see where certain stocks and their big stocks are either going to break out or they're going to get rejected. And the market's going to go how that goes. Obviously, oil stocks held up the S&P today. And so that was the big one because they were up 4, 5, 6, 7%. Some even more than that. And so that's another thing to watch out. What's oil going to do, right? Some people were saying it's going to go 90, something like that. And so what's it going to do to inflation? We won't know for a little while because there will be a delay on how that works. And so we'll have to see about that, even though, don't worry, the president came out today and said it's not a big deal. I'm not sure what he's talking about, but maybe it's not. Now, what's coming out tomorrow? And these job reports are getting more and more important, it seems like. Going to get your jolt job quits and your jolt job openings. All right, so that's something to watch out for. Factory orders month over month. It's going to be another one to watch out for. But again, I said, look how the market reacts to it, right? Eventually, you will come to a point, at some point in time, they'll go, wow, bad news for the economy is bad news for the market. As you can see by today's reaction, that really, really wasn't the case, right? They just care about the yields going down. The bond market's like, nope, they got to cut, they got to cut. Look at what the Fed's doing with his balance sheet, all this good stuff, right? And so when we eventually get to a point where they go, oh, no, bad news for the economy is bad news for the market, then we'll have to see. That could be months away, could be 30 days away. We'll have to see. Let me know in the comments what you think about that and what you're looking forward to tomorrow. And, is Apple going to bust through that level? Is Microsoft going to bust through the level that it's sitting at right now, which I told the members about? That's key because those make up such a huge chunk in the market, right? I think combined, what were they, like 13% of the S&P and at least 20%, I think, by themselves in the Qs. So all you need is those two to bust through and keep going, right? And price upgrades, they definitely help, don't they? So that's the thing to look out for. Let me just think about the whole Fed thing as well. So hit the like and subscribe button if you got anything out of it, and I'll see you tomorrow.